So in today's video, we'll talk about what is one big beautiful bill is and how this bill will impact in our tax return step by step. So number one is called standard deductions. If you're going to choose your filing status as a single for the year of 2025, your standard deduction is going to look like $15,750, which is up from $14,600 from last year. If you're filing as a married filing jointly, your standard deductions going to be 31,500, which is up from 29,200 from last year. Also, for the head of household, it's going to be $23,625, which is up from 21,900 from the last year. Another change called deductions for seniors. If you are an individual with 65 and older and who earn less than $75,000, you can claim another $6,000 on top of your standard deduction. So another happy change, it's going to be no tax on tips. So a lot of us actually work based on tips, such as delivery guys who brings us food door to door, restaurant workers, servers, waiter who brings food to our table, and it's a very good changes for them. So now they can deduct up to $25,000 from their taxable income if their gross income is less than $150,000 for the single, and $300,000 if they file jointly. So another key change, it's called no tax on overtime. So if you are someone who work a lot of overtime, this change is for you. So now you can deduct up to 12,500 for the single and up to 25,000 if you file as jointly. So now your overtime needs to be qualified overtime. So what is qualified overtime is, right? So the qualified overtime is the overtime pay that exceed your regular pay rate. For example, half of time and half. Let's say, let's try to give you a good example. Let's say your regular pay rate is $20, and that's so if you work 40 hours, you're getting $20 per each hour. I mean, up to 40. And the extra hour you work past 40, which is 41, you're getting $30 with overtime. So many of us, we actually think we can deduct the whole $30 since it's called no tax on overtime, which is wrong. We can deduct the half portion of the time and half. So let's say uh, it's going to be $20, which is your regular pay, and $10 is it's your extra pay. So you can deduct only the $10 of the $30 portion, so half of the time and half. Another change is called no tax on car loan interest. If you bought a car after December 31st, 2024, and if you finance that vehicle, you can deduct the interest you paid on that loan. So in order to qualify, that vehicle needs to be finally assembled in United States. So another big change, it's called SAL deductions. So there is to be a cap of 10,000 for the homeowners could deduct their expenses. So now this cap it's went up to 40,000. So now the homeowners can deduct their qualified expenses up to $40,000. So when you file your taxes, you should always talk to your accountants. Make sure you check your itemized deductions too, because I know many homeowners used to go for standard deductions because they could get less benefit with itemized. So make sure you talk to your accountants. I hope this video finds you helpful. We'll keep making more videos. If you need any help, please reach out to us.